Everybody, this is Ospreyeye from mychartcoach.com, and we're going to take a look at the indexes and at the bear ETFs associated with each of the indexes, and then we'll also take a look at a couple of other sector bear ETFs. Okay, so first off, what we want to look at is SPY. This is the S&P 500 Spider, and first up, okay, notice FASTO is down here at oversold levels. It's at 16. It's below 20, and so you know that is signaling that the chart is very bearish. You have RSI at 46. Bulls want to see RSI back above 50. If it stays below the bull zone, that's going to signal more downside risk. Okay, you've got this bearish crossover happened last week on ADX. Notice the green line crossed the red line to the downside. That's a signal that the bears are taking control. If the red line crosses the black line to the upside, minus DI crosses ADX upside, that'll be further signal that the bears are strong. And what's happening now is a new downtrend has started on the S&P 500. This candle here with the close below the middle Bollinger Band, that's the dotted purple line, that was the signal that a new downtrend has begun. And notice the candles have been riding below EMA4 resistance, currently at 234.35. That is the key level to break, this pink line right here. Bearish stocks ride EMA4 resistance lower. It is this is a very bearish chart. Okay, so like I've said earlier from our previous video, our next target is the 50-day simple moving average at 232. That should be a key technical level to bounce off. It looks like that's where it's headed. The candles, if you notice this close here on the 21st, it was below the middle Bollinger Band. Now the candles have worked their way back into the bands. This has formed what you know, similar to a bear flag. We'll see here if the candles can break above EMA4. If they fail to break that level, then you could see a drop down to the 50-day simple moving average. In order to get a new uptrend going, the S&P 500 is going to have to get above the middle Bollinger Band. It's got to get back above this level here. If it fails to get back above the middle Bollinger Band, that'll signal more downside risk. So notice that when the uptrend was happening, the candles were riding above this dotted purple line. So during this entire bull run, the middle Bollinger Band has been holding. This close on the 21st, that was a major bearish change in trend. This was signaling big time downside risk. Okay, so yeah, so the chart is super cooling down. This MACD bear crosses back here in March, in the first and second week of March. These were both indicators that the chart was cooling down, along with this. Notice that there was a parabolic SAR bearish flip on Tuesday as well. The dots flipped above the candles. So yeah, so S&P 500 is not looking good. Let's take a look at the Drixon Daily S&P 500 bear 3 times. So this is the one way to play the S&P 500 if the markets are dropping. You can go long SPXS, and this has some nice upside potential. Notice that this is the opposite. There was a nasty downtrend. Candles were forming below the middle Bollinger Band, and then you had here on the 21st a break above the middle Bollinger Band for the first time since this candle back here. Notice back here at the end of December there was a close above the middle Bollinger Band, but it failed to hold, and that signaled this really long downtrend. So now we have this bullish change in trend. Now we've got this new uptrend starting. As long as candles are holding forming above the middle Bollinger Band and they're riding EMA4 support higher, this is a very strong chart. Okay, this is like a bull flag forming off of this candle. Okay, so this is like a flagpole, this big white candle, and then now you've got this flag forming off the pole. If support holds here, you could see a push higher and could see the 50-day simple moving average, which is our next target tested. That's the next key level to break. If the uptrend continues, we anticipate a run to the 50-day simple moving average at 954. If it could break that level, then you're talking about, you know, potential 100-day simple moving average and this prior support support zone would be the next big resistance level if it can get past here. This is a key resistance zone from it was support back here in February. You notice it's trending sideways at the so at the similar level. It's hitting resistance where there was once support, and now if there's a break above that level, that should signal a move higher. Notice volume has come back into the play. This was the big load candle here back here at the low in March. Notice that was a company with a giant volume bar. This is where smart money, the big players, loaded, right? And so they've been in the driver's seat ever since. So yeah, this has got a nice uptrend going. We anticipate the uptrend continuing as long as support holds. Notice how RSI is now above 50 at 52 and in the bull zone with a lot of room to run until 70 overbought level. Fasto is above 80 now and in the power zone. And then notice that on Plus DI there's a bullish crossover. Plus DI crossed the red line to the upside. So this chart is heating up as the spider is S&P 500 is cooling down. Okay, let's take a look at the Dow Jones Industrial Average. This is ticker symbol INDU. Okay, this had the break below the 50-day below 50 on RSI, so that signals the chart is cooling down. Now you've got Fasto below 20 at oversold levels. Very similar chart to the last chart, except for it's even more bearish. The candles are, once again, it was the big drop below the middle Bollinger Band on the 21st that signaled the start of a new downtrend. There was a close below the lower Bollinger Band. The candles have been trying to work their way back into the bands, but notice the close on Friday was once again below the lower Bollinger Band. This is a very bearish chart. Notice the candles are forming below EMA4 resistance. This is signaling downside risk. Once again, our next target is the 50-day simple moving average at 20,449. There should be a technical bounce off that level. That is a huge support level. Bullish stocks hold the 50-day simple moving average when tested. And this is the index here. The index, just like in equity, if it tests the 50-day simple moving average, it should hold. This should be a key level to bounce off and then spring back up to the middle Bollinger Band. If the 50-day simple moving average is tested and there's a close below, that's going to signal big downside risk for the markets, and that's going to put the 100-day simple moving average on deck way down here at 19,865. So that could be the big correction. So keep an eye on the 50-day simple moving average. It's going to be a key technical zone. There should be at least a technical bounce off that level if it's tested. If there's a close below, that's going to signal major downside risk. Look at all the red volume bars in a row. Okay, so when you get there's 7 red volume bars in a row, 7 red candles in a row. This is due for a bounce. So keep an eye out for a technical bounce play next week due to the oversold levels on Fasto. But in order for this to head higher, it's going to have to close above EMA4. That's going to be the first signal that the chart is heating up. Okay, let's take a look at the bear ETF for the Dow Jones Industrial Average, the Dow 30, and we're looking at here at ticker symbol DXD. Okay, and so we've got the RSI heating up. So you have RSI here in the 50 to 70 bull zone it's here at 55, and then now you've got Fasto above 80, so it's in the power zone. So the chart is really heating up. Notice how plus DI and minus DI have been crossing back and forth. If the green line stays above the red line and then crosses above the ADX, the black line, that'll be a signal the bulls have taken control. Okay, this is on the 21st. There was the bullish close above the middle Bollinger Band. Notice how it had been resistance during the big drop, and then now it's turning into support. The candles worked back into the bands, and now they're riding EMA4 support higher. Notice on Friday there was this bounce off of EMA4 support and a close above the upper Bollinger Band. This is a nice strong new uptrend. Okay, the next target is the 50-day simple moving average at 1320. As long as this middle Bollinger Band holds at 1260, then the new uptrend is intact. So this is a major reversal last week for this bear ETF. This is a big signal that the bears are now in control of the markets. We're having multiple indexes are confirming the same thing. Notice the giant volume spike here, and then just put into go do a Google search of Carl Icahn and his call on turning bearish on the markets, right? Because everybody's calling this the Trump rally, but in our chat, I've been calling this the Trump the icon rally. This whole rally started on election night when Carl Icahn started buying when it looked like Trump was going to win, and when he put his billions of dollars to work, that kicked off the whole rally. Well, he came out in early March and said that he is now bearish on the stock market, and ever since he said that, the market has been going down. So, you know, all of his billionaire buddies are following him into this trade, and they are in control. You know, we're just the small-time retail traders. All we can do is follow the money. This, to me, right here, this was Carl Icahn loading up on his bearish bet on March 1st. Smart money loads at the bottom, right? They're smart. They're the big money. They load down here. Now they're in control, and this is heading higher. So the bottom line is, until Carl Icahn comes out and says that he's buying stocks again, there's a good chance that the markets will continue being under pressure. Remember, he's the one who made the call, and everybody followed him into this trade. And I'm sure when he decided to pull out and he went bearish on you know, he started, you know, obviously he's got long-term positions, and he's a big-time player, and he's going to have lots of stocks that he's holding long, but he's taken out hedges against his long positions with you know, to strategize and to prevent from taking a big loss on a big downturn. So the bottom line is the big players have gone bearish. You can read up on the topic, and the charts are confirming this. Okay, this is all confirming what you're hearing in the media. And so yeah, so this is the big load. You always see a big low candle at the bottom. Okay, now let's look at NASDAQ. NASDAQ had been holding up a lot better. Okay, this is ticker symbol COMPQ, and notice you still have RSI above 50. So if RSI closed at 51, you know, it worked its way back above that level, it needs to stay above 50 for this chart to stay strong. If it goes below 50 and stays below that level, that'll be a signal that the chart has cooled down. FASTO has worked its way back above 20. Okay, this had the big drop on the 21st as well, below the middle Bollinger Band. It bounced off the middle Bollinger Band, but notice once again, it closed below EMA 4. Check it out. This is a black candle. The open is the top of this real candle body, and the close is the bottom. And this signals that even though the stock was up on the day, it still closed below its open. Even though COMPQ closed up 0.19%, the bears were actually in control into the close. And notice they closed it below EMA 4. Why did they close it below EMA 4? Because the programs are set to sell. The programs, that is the sell zone. Bear stocks ride EMA 4 resistance lower. If you're going to short stocks, that's what you want to do. You take a position on the break below the middle Bollinger Band, and you keep riding your short position as long as EMA 4 resistance is holding. If there's a close above EMA 4, that's when you look to cover your position. It's the inverse of what you do on a long trade. On a long trade, you would load back here on the break above the middle Bollinger Band, and you continue riding as long as EMA 4 support is holding. You know, if you want to press it, you can ride as long as the middle Bollinger Band is holding. But the bottom line is, if the candles are forming above EMA 4, you keep riding. If it breaks below, you look to lock in gains for a quick flip. So this is signaling downside risk and that the bears are in control. We're looking at the NASDAQ down here at the 50-day simple moving average for the NASDAQ is the next key level to hold on a pullback if lower Bollinger Band support breaks. Keep an eye on COMPQ. The NASDAQ has been very strong. If it stays below the middle Bollinger Band and it continues with this new downtrend, that will be a major red flag for the technology stocks, and it'll be a red flag for the markets in general, because this has been a much more healthy index compared to the Dow Jones Industrial Average and the S&P 500. So yeah, so keep an eye out on the 50-day simple moving average for a technical bounce. Notice, I mean, there were bear crosses on MACD. There was one last week on the 8, 13, and 5. Those are all signaling downside risk, along with the green dots flipping above the candles. Okay, let's look at TECS. This is the Drixon Daily Technology Bear 3 times, and this is one way to play the technology stocks. If they do correct, if the NASDAQ does correct, this should head higher. What you want to see is the RSI above 50. FASTO is in the 50 to 80 bull zone, so FASTO has heated up. You know, right now this is showing the bears are still in control because plus DI, the green line, is below the red and the black line. So what's going on is you've got the middle Bollinger Band dotted purple line is major resistance. On the 21st, there was a close above that level. Okay, so that closed above that level for the first time since way back here in, what is that, back here at the end of December, at the very end of the year, the last trading day of the year. And so this is the first close above that level since the very end of 2016. And notice here the close on Friday. This is an open red candle. What this means is that the open was the bottom of the candle here and the close was the top. And so even though the TECS was down on the day, it closed above its open. That's signaling that the bulls were actually in control into the close. And so for this chart, the big level is 1326. That is the middle Bollinger Band. That is the key level to break. If you see a close above that level and that level turns into support, then a new uptrend could begin. And that would be putting the 50-day simple moving average at 1435 on deck. Notice there was a huge load on the 21st. So traders are starting to feel like the technology stocks could be under pressure. If the middle Bollinger Band remains resistance and it fails to close above that level, that'll signal downside risk for TECS, and it would be bullish for NASDAQ. Look at the flip on the dots. So there's a parabolic bullish flip. Notice that the MACD line is the black line is above the purple line, the blue line here. That's signaling upside potential. Okay, so this is signaling the bulls are actually in control right now. You've got it on both time frames. So this chart is heating up. It just needs to break the middle Bollinger Band. Okay, let's take a look at the Russell 2000. Okay, this is a look at the small caps, the penny stocks, and this has been under pressure as well. This actually had been under more pressure than the other indexes. This here now it's below 50 on RSI, below 50 on FASTO. You've got plus DI below minus DI, so the bears are currently in control. This is a chart that I've shown a couple times. You can see last week, after the big drop on the 21st, there was a bounce off this January support zone, this green horizontal support line. That's also lined up with the 100-day simple moving average and the lower Bollinger Band. This is a huge support zone between 132 and 133. We'll call it the 133 zone. If there's a break below this level, that's going to signal major downside risk for the penny stocks and for the Russell 2000. That's going to put this 130 on deck, which is the bottom of this December support level. If that breaks, then you could see a potential fill of this November gap. These two horizontal lines represent this gap from back here that is unfilled. And so if you get a drop below the 100-day simple moving average, there could be a potential drop all the way down to fill this gap and bounce off the 200-day simple moving average at 126. So once again, notice there was a black candle on Friday with the close below EMA4. You know, they're not letting it close above EMA4. A close above that level would be a signal the chart is heating up, and then that's going to put the middle Bollinger Band and the 50-day simple moving average on deck. In order to get a new uptrend going, it's going to have to get back above those two levels. So those are the key levels to break. If the EMA4 fails to break and you see a break below the 100-day simple moving average, that'll be a major red flag that there's downside risk. Notice the declining volume pattern. MACD is bearish on both time frames, and you've got the parabolic SAR bearish flip. When IWM is bearish, what you can look at to go to short the small caps would be TZA, which is the small cap bear 3 times. And if you notice here, RSI is very bullish at 56, and in the 50 to 70 bull zone, we've got FASTO in the 50 to 80 bull zone at 61. So both indicators are bullish and in the bull zone. You've got the plus DI up here above minus DI and ADX, so that's showing the bulls are in control. There's a uptrend on this chart. Notice the candles are forming above the middle Bollinger Band, which is 1856, and above the 50-day simple moving average, which is 1879. So candles forming above both those levels means this chart is very strong. It's very bullish with upside potential. Notice how they closed TZA above EMA4. Notice how the low, you know, it had traded below that during the day, but the close was above it. Notice that once again, you've got the open red candle. This shows that the bulls were actually in control even though it was down on the day. So this is still a very strong uptrend. Okay, so this has more upside potential. As long as candles are forming above the middle Bollinger Band and the 50-day simple moving average, there'll be more upside potential. The 1960 to 1970 range is going to be the key level to break. If it can break out above that, then you're looking looking at the close back here in January as the key level to break. Let's see here. Yeah, back here, this high close at the 2025 zone will be the next key level. And so this is just showing that while the small caps are under pressure, the bear ETF has a very nice uptrend going. Notice that MACD is bullish on both time frames. There is a parabolic SAR is bullish as well, and so this chart is showing more upside potential. Okay, let's look at the mid cap bear 3 times. This is ticker symbol MIDZ. Okay, this is a really thinly traded stock. Look, it's got hardly any volume to it. This is a ETF here. Some of these ETFs you have to watch out for. You don't want to trade the thinly traded ETFs because they could be very illiquid. But I want to show you this just so you can see what's happening on the chart. And what you can see here is the middle Bollinger Band turning into support. Notice this zone here. The middle Bollinger Band's a dotted purple line. That level turned into support, and now you've got the 50-day simple moving average holding, the green line. So this is signaling that not only the small caps are under pressure, but the mid caps are under pressure as well. So you got the small, mids, and large caps all under intense pressure right now. If this 50-day simple moving average holds, then you're looking at the 100-day simple moving average at 2187 is the next target. So just wanted to show you this. This is a low volume play, not recommending anybody trading this, just showing the mid caps are under pressure as well. Now let's take a look at the biotech sector. This is LABD. This is the biotech bear 3 times, and if the biotechs start heading down and are under pressure, this would be one way to play the inverse of that. This would be a way to short the stocks, a way to go long on the bear side and on the downside. And so what you want to see RSI get back above 50 if you're long LABD. Vasto is back between the 50 and 80 bull zone, not at overbought levels. Plus DI, the green line, is still above the red line, but they're very close together. What bulls want to see is the green line breaking the black line ADX to the upside. That would be a clear signal that the bulls have now taken control. The bullish development on this chart is back here and on the 21st once again, the close above the middle Bollinger Band. Notice how it had been big resistance. If you look back here on the 30th, there was a close above the middle Bollinger Band, but it failed to hold and the downtrend continued. But check out the way this ended the week. Wednesday, Thursday, and Friday were closes above the middle Bollinger Band all 3 days. So that level is turning into support. The close was just below the EMA4, which is at 1080. The close was at 1079, so it's trying to hold that level. Once again, it's looking like a bull flag forming off this flagpole here. If support holds and the middle Bollinger Band fails to, it turns into support, then we're looking at the 50-day simple moving average at 1212 is our new target. This is looking like LABD is starting a new uptrend. Okay, look how you have much more volume on the up day and lighter volume on the down day. There was a third of the volume on the down day as on the up day. That's showing that the sellers are tiring here. There's more buyers than sellers. It looks like people are starting to go long the bear, are starting to short the biotech sector. And so this is looking bearish for the biotech stocks, even though we have the healthcare sector doing well and biotech plays doing well, within that sector doing well also. This was one of the worst weeks for the healthcare sector for many weeks, and so it is starting to cool down a little bit, even though there are bright spots. Okay, let's look at the financial bear. This is FAZ, financial bear 3 times. It has heated up as well. You've got RSI in the 50 to 70 bull zone at 62. Fasto corrected a little bit. Now it's at 76. It's not at overbought levels. ADX, you've got the green line above the black and red lines, so it is bullish. And what happened here with FAZ is it's really heated up big time. So it turned, closed above the middle Bollinger Band last week, like 2 weeks ago, at the 2 Fridays ago, and then it followed through last week, and it continued the bullish move higher. And the close on the 21st above the above the 50-day simple moving average, the green line, was super strong. Okay, this is what we're looking for with the other bear ETFs. We want them to follow what FAZ is doing. Now think about it. This is the financial bear 3 times. How many talking heads have you heard talk on CNBC about how they're long financial stocks? I mean, there's so many many people that have been bullish on financial stocks that are looking like they're underwater right now, unless they've jumped ship and they're going short, because right now FAZ is the play. This is a super strong uptrend. We've got the candles forming above the middle Bollinger Band and now above the 50-day simple moving average. The candles work back into the bands and they're holding EMA4 support. This is exactly what bulls want to see. The financial sector is in trouble right now. The banks are under immense pressure. All right, this is looking like some serious upside. We've got a target at the 2185 right now on this baby. This thing's heading higher. All right, so if it breaks below the 50-day simple moving average, then it could pull back and test the middle Bollinger Band here at 1841. But this looks very bearish for the banks and very bullish for FAZ. We see more upside potential and a possible run up to that 100-day simple moving average. All right, now let's look at this is what we got our eye on. Okay, so what's been the most beat up sector going on? Okay, in our eyes, nothing's been more beat up than the energy sector. Okay, this is ERY. This is the energy bear 3 times. Now look at this really strong uptrend. Check out how the energy bear has been very strong. Down here at the end of December, beginning of January, it turned the middle Bollinger Band into support, and it has this really strong uptrend going. So it's been, performing very, very well. This has been one of the bright spots here, has been being bearish on the energy sector. It's been under big pressure. Everybody knows oil has dropped down to like the 47, 48 range, and a lot of people are predicting an oil bounce coming up off this level. And if oil bounces, then we could see a reversal in the energy sector. And we did some scanning on Friday. I recommend people come and join in our chat. There's so much information that we put out that doesn't get out, on stock twits and through our videos and stuff like that we try to teach people and just share the information. Everybody's sharing all the good information together. What we're seeing is we're seeing the energy sector heat up. We're seeing, we had multiple plays that had MACD bullish crossovers. We had lots of stocks that are bouncing and consolidating off the bottom. So we're keeping an eye. We're thinking if the markets keep correcting harder, that we could see a nice reversal, bullish reversal for the energy sector. Keep in mind, the energy sector did not participate in the market rally. Okay, so as the markets were going up, the energy sector was going down. Remember, this is the bear ETF, and so this was rising. The bears were strong while the markets were dropping. So we're thinking the inverse of that could happen as the markets correct. If the markets correct, then the stocks that didn't participate in the market rally should start doing better. They should reverse, and so we're thinking there could be a reversal in the energy sector, and this might be a bright spot that we could find some plays going forward if the markets do have a strong correction. So yeah, keep an eye on the energy sector, ERY. We're looking at the 200-day simple moving average here at 1246. That's the next big resistance level. If it fails to break, then you could see ERY pull back, and you could see a possible bounce for the energy stocks. This is a very strong chart. As long as the middle Bollinger Band currently at 1135 is holding, then the energy bears are very, very strong. And so this is what we would like to see for these other bear ETFs get going. If they get good uptrends going, this is what you're looking at potentially if the markets do correct for the other bear ETFs. This is a very good uptrend. If there's a break below the middle Bollinger Band, then you could see a drop down to the 100-day simple moving average and the 50-day simple moving average, which are crossing down here. There's a bullish crossover showing the chart is heating up even more. And yeah, but right now this is a strong chart. I'm just throwing it out there that if the markets do correct, keep an eye on the energy stocks. It looks like they could be trying to bounce. All right, hey, if you enjoy this information, check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. Thank you.